Hello and welcome to the quarterly market update. My name is Matthew Howley. I'm one of the advisors here at WARR, and today I'm joined by Steve Garth, a member of our investment committee. Steve, thank you for joining us today.
Thank you, Matt. It's great to be here.
As you know, it's been a really strong 12 months for equities. A lot of country stock markets reaching all-time highs. If we focus on the December quarter, we saw a really strong start to the quarter. But this sort of fell off in the last few weeks of the year, Steve. So why don't we start on that note? How have Australian markets performed over the last quarter?
Yeah, thanks, Matt. And here's a chart showing sort of the day-by-day returns of the Australian market over the course of the year. And to your point, you can see it's just kind of gone higher and higher and higher. You will note the wobbles in the market. That happens throughout the year. But all in all, it's been a really good return for the year, 11.1% overall. Now, you will see, as you mentioned, that the markets have come off just in the last few weeks of December. So halfway through December, market had hit a new high, and then there was a pullback, bit of a sell down. And you can see it's a negative quarter, very small negative quarter. So it's taken off some of the shine, what we might call a bit of a holiday slowdown coming into Christmas. But all in all, a good year for the Australian market.
Right, so it's been a good year, but it would be great to touch on. So what really caused, I guess, a bit of that holiday slowdown that you mentioned in the last few weeks of the year?
I don't think this will surprise anyone, Matt, but every day in the media, it's all about interest rates and inflation. And sure enough, where you see that market coming off in the last few weeks of December, it really coincided with the last board meeting of the RBA, who said, inflation's still pretty high, we're not quite ready to lower rates. And then just a few weeks later, over in the US, the Federal Reserve did lower rates, but said, don't expect a lot of other rate cuts in the year. And so the market overall thought, maybe we've bid up this market a little bit high.
Now, we know that the Australian market is made up of two very dominant sectors, being financials and materials. So how have those two sectors performed?
Yeah, the answer is completely differently. Have a look at this chart. You can see that financials, man, up over 33% for the year. Very strong, and pretty strong performance in the quarter as well. But the material sector, they're our big miners, BHP and Rio. Man, they've had a bad year. They're down like 12% for the year, and most of that's in the last quarter where they've really come off. And the reason for that, Matt, is you superimpose a chart here of the iron ore price. You can see that the materials sector is very closely aligned with what's happening with the iron ore price. Now, the iron ore price is down because our biggest buyer of iron ore is the Chinese. Their economy is struggling. They're not buying our iron ore.
Now, touching on US markets, we know, of course, it's been another stellar year for the US, really led by those mega cap tech stocks that we've been speaking about, it seems, throughout the whole year. So how has the US performed?
Yeah, well, you've summed it up perfectly, Matt. The US has been another powerhouse performer. It's the best performer of all markets throughout the world, and very much driven by, as you said, those very large tech stock, the sort of large growth stocks in the market, like Nvidia and Apple and Microsoft. You see in the US too, that same, what I've called a holiday slowdown. Markets were hitting a peak in mid-December, and they've come off for the reasons we mentioned before. It's a fear that inflation is going to stay a little bit higher than what the market was originally anticipating.
So we know that the US has done well, but what about the rest of the world?
So on this chart, let me show you the rest of the world in US dollars. So this looks horrible because it's what a US investor would see. They've had a great 25% return in their market. But look at the rest of the world. That's the MSCI World Index ex-US.
It sort of looks like it stayed pretty stagnant.
It's pretty stagnant, up about 5% for the year, down over 7% in the quarter. But all that's got to do with this high US dollar, and it's really taken off in the last quarter, Matt. Once again, when the market thought, we're not going to get the interest rate cuts we're expecting, then the US dollar went up.
How does that affect the Australian dollar?
No surprise when you look at the chart here, you see the Aussie dollar down, over 10%, nearly all of that's in the quarter. So this is due to not only the strong US dollar, but also our own slow economy here. as well as the fact the economic woes in China
Mm.
are weighing on the Australian dollar. So, Matt, it's probably a good point then. Australian dollars started at 68 cents, finished at 62 cents. We showed what the rest of the world looked like before in US dollar terms. If I show you what the rest of the world looks like in Aussie dollar terms, which is what our investors, what our clients would have seen in a diversified portfolio, things look pretty good.
It's a lot better, isn't it?
It's a lot better. So once again, US standout market, 35% return in Aussie dollar
Yes.
terms. But you can see every other market has done equally as well as Australia, if not a little bit better. Even the emerging markets have had a good return for the year. So when you look at the overall, what we call the international markets there on the left-hand side, really
It's
strong
still positive,
return there.
very positive.
Yeah.
Steve, so you've just spoken about the dominance of those large US tech stocks. And now here at WARR Hunt, we slightly underweight against these tech stocks as they have a lower expected return going forward.
That's right, Matt. So what we tend to do is then overweight those higher expected return stocks going forward. So our portfolios are well positioned for the future.
Great, thanks for that, Steve. So as we know, it's been a really strong year for markets, which is quite remarkable considering a lot of analysts at the start of 2024 were suggesting that we could be heading towards a recession or it would be a very difficult year for markets. So I think that summarises the importance of holding a well-rounded, diversified portfolio.
That's right, and not relying on market forecasts who
Absolutely.
invariably get it wrong every year.
Great. Well, thank you for watching. We look forward to seeing you next time.